Would like to welcome our platinum members who are here listening to the webinar for the first time. Typically, these webinars have been given to our tax team members, but recently with some of the changes that we've made to our platinum program, we've extended these monthly webinars out to everyone, and we're definitely appreciative of all of you guys being here. I've done a few of these webinars, and the one thing that I always like to say at the beginning of them is I appreciate your time. I appreciate you being here to get educated and to learn, and increase your guys' knowledge, because the more that you guys know, realistically, the easier my job ends up being when we're doing consulting or we're preparing your tax returns. So I'm really appreciative of you guys being here and taking the time to be able to do that. As I prepare for these webinars, I'm certainly thinking about you guys and trying to get you information that I feel would be really pertinent to your businesses and to your education and to what we want to do together going forward. So hopefully you guys end up finding that stuff enjoyable. Hopefully you find it useful, and that's the reason that you're here. As always, I'm always open and available to hear your guys' feedback and to even if you have suggestions on things that you'd like to learn more about through this webinar broadcast, I'm happy to hear and listen to those. And as a firm, we're committed to doing those things that are gonna be what you guys want them to be. So without further ado, I'll get into it. What we're going to talk about today is the benefits of year-end planning. I can't say enough about the benefits of year-end planning. For most accountants across the country, once October 15th passes, it's almost like summer vacation for teachers. There's no deadlines for several months, and it's really just a time to sit back and relax a little bit. But also, what I've always found in my career is that sitting down with my clients and figuring out what we can do to help them before December 31st has been a great use of my time. So, there's definitely benefits to it. We're going to talk about what those benefits are, and hopefully as we go through this, you guys end up having a desire to say, well, hey, you know what, I want a year-end plan, and I want to make sure that I've had a consultation with my CPA or tax preparer, and we have an idea of what we're looking at going forward. I also want to talk about what safe harbor is, and define some of that terminology. A lot of times accountants, we can use this jargon, and there's a whole thick internal revenue code book that sometimes we drop that terminology way too easy, and I want to educate you guys on what that is. I also want to talk about why we would make estimated tax payments. I'll go through some IRS penalties that are common that we really want to work to avoid. I'll go through some year-end planning strategies, some things that we can look at. I think the webinar email that you guys ended up getting said that we'd have 4 strategies. I actually came up with a few extra ones, so we'll get into that a little bit. We'll also talk about tax projections and what I would do in a year-end tax projection situation, and kind of how some of that stuff works. So hopefully that's a good menu of what we're going to talk about. Hopefully you find a lot of this useful, and let's dig into it a little bit. The benefits of a year-end tax plan. One of the greatest things is that there's still time to do something. And I put an exclamation point after that because, I'm excited about the opportunity to do something for you. Oftentimes, I'll hear from people in March or April when they are ready to start working on their returns, and they'll give me some piece of information like, well, hey, I sold, 4 rental properties in December, so it's going to be a tough tax year. You have to let me know what we can do about that. And then I come and I say, well, it's March or it's April of 2016. There really isn't anything that we can do anymore. What's done is done because our year's over. So, that's kind of one of the things where it's like, hey, you know what? If you're in a situation where you're selling rental properties or you have something that you want to do, we now have October, November, December to figure that out and figure out if there's something that we can do to shelter or limit some tax. The other thing I like is that no surprises come in April or October. I don't know how many times this has happened throughout my career, but it does happen where you prepare a tax return and then somebody will come to you and say, we were not expecting to owe that much. And, as the practitioner, at the end of the day, it's kind of like you're the guy that everybody looks at to say, like, you're the champion when a refund's coming, and, you're the opposite of the champion when there's an amount owed. But the reality is it's always good that we can kind of have an understanding and limit what those surprises are. So if I could take time right now to get you guys to understand what the tax refund is going to look like or what the tax liability is going to look like right now based on some estimates and projections, then we can kind of, feel comfortable about what we're doing going into the next quarter. So that's big for me as a benefit. I also love just the relationship that we can build during this time of year. One of the things while we're kind of going through the February, March, April, September time, we get a lot of tax returns and, we're in front of our computers, typing away, putting numbers in. And a lot of times we don't really get to have that, let's get on the phone and let's chat a little bit and get to know each other better. And that's something as a practitioner, as a CPA, that I really, really enjoy. I like having a good relationship and an understanding of who my clients are. And I also like for you guys to know me as well. And so sometimes when we get in that grind, we don't really have as much time to really do that sort of stuff, even though it's something that is important. So this is a great time of year where we actually do have some of that time to build the relationship, get to know you guys, and also in getting to know you guys, it always seems like questions come out that maybe we wouldn't have got, or maybe you'll bring up something that might trigger something into my head to ask you. And so having that relationship with your tax preparer is vital. And this is a great time to be able to build that. And then overall, usually, and going through all that, just in kind of summation, all the rest of the stuff, that we can usually find some things that will save tax dollars. And so, that to me is a good overview of what the benefits of our year-end planning are and what we can accomplish in the next couple months. All right, I'll get into a couple tax terms for you. Safe harbor. And one of the biggest things when it comes to tax planning is just getting an idea of what needs to be paid. What do I need to do to get to give to the government so that I'll stay out of trouble with penalties and interest? And so the safe harbor amount is what you need to pay during the tax year to avoid any interest and penalties that the IRS is going to give. Okay, so a lot of times I'll sit down with my clients right now and we'll say, okay, you have all of this information going this year, and they'll say, what do I need to pay during my quarterly tax payments? Okay, perfect. That's a great question. We're going to go through that question. And the accountants will typically always kind of go back to, okay, what does the safe harbor amount need to be? And so the way that we figure that out is by going and looking at the previous year's tax return. And that is what dictates what that safe harbor amount is. And so if you look on your tax return and you see total tax paid, that's your key number right there that we're going to work off of to figure out what you need to pay for that year. So I've got a little example here. And really what we're kind of looking at is taxpayers that are over 150,000 in AGI. That's who you're going to look to be making these quarterly estimated tax payments. And there's two ways to go about it. One, you could pay 90% of 2015 tax, expected tax, or you could pay 110% of your 2014 tax. And so it's the smaller of those two numbers. So I'll give you a second here and let you look through my example in figuring out how much would we have to pay in quarterly tax payments under this scenario. So John, the taxpayer, has taxable income of $200,000 and pays $40,000 in tax in 2014. We sit down and we have a year-end plan, and he tells me, Ronnie, I'm going to have $300,000 in income in 2015. My business is doing better, and we project out the tax is going to be $60,000. And he goes, I just need to know what I need to pay for my quarterly payments. The way quarterly payments work is kind of self-explanatory. It's quarterly. There's 4 payments. You make your first quarter payment in April, you make your second quarter payment in June, your third quarter payment in September, and your fourth quarter payment in January. Under this example, maybe you guys are jotting down some notes, maybe you're doing a little math here. But like I said, if I was going to go and look at what safe harbor is, and I say, all right, John, the taxpayer, in order to avoid all penalties and interest that you could possibly get, I'd look at your $40,000 amount and I'd say, okay, that's my key number right there. There's 2 ways to go about this. Your 2014 tax times 110%, and I would say, okay, there's $44,000. All right. And then I'd say there's 4 quarterly payments. So if you make $11,000 per quarter, you're going to avoid the penalties and interest that the IRS will give you. Okay. Hopefully that makes sense to you guys. With you guys being kind of distant and not being able to see a glare over the eyes or anything like that, it's a little bit hard, but hopefully that makes sense to you guys. So then that's route number 1. The other route is 90% of expected tax for 2015. So if we project out that he's going to make $60,000, 90% of that, we would take that number and we'd say, okay, you're going to end up owing the 90% of the 60, divide that by 4, and there we are. All right, 54,000 divided by the 4 payments, and so you make that amount. All right, so the smaller amount is the 44,000. Okay, so if you wanted to just go the 110% of 2014, you could do the 11,000. Then come April, you're going to owe another 16,000. Okay, and you would still avoid all penalties and interest under that way. I have some clients that say, you know what, if you think I'm going to owe 60,000, I'm going to pay 15,000 a quarter so that I don't owe anything in April. Okay, you can do that too. It's whatever. And but under that circumstance, maybe you just ended up giving the IRS a little interest-free loan for several months that you didn't need to. So it really just kind of boils down to what the client is most comfortable with and what the client wants to do in that regard. So that's one thing as part of our tax plan that we would end up running through. Okay, let's figure out what you need to pay quarterly. All right, hopefully that makes sense to you guys. All right, I'll get into the penalties a little bit. There are a lot of IRS penalties, and IRS penalties are irritating. They're frustrating. I don't enjoy the penalties, and so one thing that I always do look at is right here on line 79. I've given you a picture of it there. Is estimated tax penalties. And so on Form 2210, which is a confusing form of the IRS, I gave you a link to it. You could click on it if you like. The 2210 will calculate out an underpayment of estimated tax by the individual. And that's from IRC 6654. Now, that's why I kind of went through the safe harbor thing. If you end up being in safe harbor and you paid what you needed to pay, that estimated tax penalty number right there is going to be 0. All right. If there was a penalty could come up there. And so I do always kind of take a look there to see if there are planning opportunities, because I've seen that number, get up to $100, $200, $300, $400. And when that's the case, we definitely have an opportunity for for planning and making sure that you guys are paying in what needs to be paid in. And it's not super difficult to do, but they take this complicated structure, they actually boil it down to days in their calculation for what they're going to penalize you, and it's always based on the amount that you owe. So take a look on your tax return, and that's kind of why I put these pictures in there so that you can see and take a look at your tax return. If you have a number right there, let's look at what we can do to get rid of that number. And in this case, it was $2, and obviously the client's not super upset about a $2 tax penalty. The other side of it, and I'll just give this to you guys, is I have some clients that I've talked with, and they don't care about that penalty. They say, I'm not going to make my estimated tax payments. I'd rather hang on to my $44,000 throughout the year, and I'll just make the payment in April. But the IRS is going to penalize you for doing that. So, that also is an option. But, that's kind of the routine that we have, what people end up doing. I'll give you another little penalty that I feel like is important to discuss, and that's the late payment of tax penalty, and that's under Code Section 6651. What a lot of people don't always remember is that you have to pay your tax by April 15th, even if you're filing an extension. All right, so the extension gives you a 6-month window to file your tax return. But the IRS still requires us to pay the tax due by that time. And so a lot of clients that I get end up filing extensions. It's just the nature of this of the business world. People are getting their K-1s over the summer. It's definitely something that we are accustomed to and that we know is going to happen. The way that people get around that is by making an extension payment and covering whatever taxes we project would be owed. And so with a lot of my clients, we'll sit down before April 15th 's over. If they know they're not going to make it and they're not going to pay on time, then I'm going to say, all right, let's put in the rest of the numbers that we think that we're going to get over the summer or later, and let's see approximately what you're going to owe. And then if you make a payment to the IRS, then you'll be covered. But that amount is half of 1% of the unpaid tax per month after the due date. So I'll just give a little example. If you ended up owing, just in your head, you end up saying, okay, you know what, it's going to cost me $50 a month not to do this 10 grand payment. That may be worth it to you. It may not be worth it to you. But if you do end up getting that penalty, you'll end up getting a notice from the IRS after you file your tax return that there's some that there's still an amount due. So just something to look out for with penalties. The better our relationship is, the more understanding that we can get with those penalties. And, I'm real confident that as long as we all kind of understand, what the penalties are, we can end up figuring out how to avoid them or how to make sure that, you're okay with kind of getting them instead of it just being a surprise. That's the thing that I don't really want, is it to be a surprise. Now, one of the things that ends up being tough in going through all this is, let's say you file an extension. And I had a lot of clients this year do this. And, I certainly think that, through this webinar, through, what we want to do kind of going forward and kind of my relationship with the clients is, if you end up filing an extension, what happens a lot of the time? That first quarter, second quarter payment end up kind of getting lost by the wayside because we haven't filed that 2014 tax return yet, or the 2015 tax return yet, to know what safe harbor in the next year is going to be. Hopefully that makes sense. I'm going to kind of repeat that. If you file an extension, let's say you file an extension and you file your tax return on October 10th, what happened? You went past your first quarter, your second quarter, and your third quarter payment already, and we didn't really know what should be paid because we don't really know what safe harbor was going to be unless we were really on the ball. And so one of the things that I kind of want to, do going forward, or one of the things that I want to make sure that you're aware of asking, is saying, okay, I know we're filing an extension, but I also know that I still need to make my first, second, and third quarter payments, and I want to make sure that I do those on time. So can we get an estimated amount, or at least let me get something out there that's close enough to get me to safe harbor? And, I'll just say, from the CPA, from the tax prep, that needs to be a team effort with the client. Okay, I definitely believe that needs to be a team effort with the client, because when we file that return, that's when we have a really good understanding of exactly what safe harbor needs to be. But in April, we need that estimated amount to be able to really calculate out what you're going to need to do on that first, second, and third quarter payment. Hopefully that kind of ends up making to you too. If any of this doesn't make sense, all I want you to do is ask. I just want you to know in the back of your mind, you know what? I need to know something about, avoiding penalties and making estimated tax payments. And here at Anderson, we're equipped to be able to tell you, okay, this is exactly what we need to do. The other thing that I'm kind of working on right now is putting together a tax calendar going forward, where we're going to be able to, get that calendar out to you guys, and then also have a system set up to where we send out email reminders that that quarterly tax payments are due. And that's one of the things that, from some of the feedback that I've gotten from you guys, is it's really easy for those dates and that type of thing to slip the mind, and I totally understand that. So what I'm working on in the off season now is putting together a calendar that's going to be something that is hands-on. It's something that you can look at and know, oh yeah, I need to make this payment, and I need to make it by this date. So, look for something like that to unravel, come out to in the coming future here. All right, so let's get past. I don't like talking about penalties a lot. It's negative, and I want to focus on some of the things that are more positive. It's necessary, but let's talk a little bit about tax projections. At this time of year, this is basically how the tax projection works. You and I can get on the phone for a 15 to 30-minute consultation. You're going to end up running through and telling me, whatever comes to your mind on your tax situation for the year. You'll spill your guts. You're going to tell me all sorts of things. I'm going to get an understanding of what you have going on based on, your prior year tax return, based on target question that I get to be able to software, put the numbers in, ask you questions on things that I'm fuzzy about. We'll make some estimates. You may actually be on the ball to where you know exactly what the numbers are going to be, and you can tell me exactly what the numbers are. I've had several clients that we sat down last year when I was pretty new to Anderson and started here. This is what I started with, was doing tax projections and trying to get you guys to kind of be where you needed to be. And then we put it in the software. We get a projection. We get an understanding of what you're going to owe. And then we'll look for the opportunities to save tax based on your situation. Excuse me. And that's really how the projection works. It takes us about an hour. Sometimes there's going to be more complicated projections that we need to go through and really check into a lot of stuff. But for the most part, we can go through this in about an hour and really get an understanding of what you're going to need to pay in April, or what you need to make a fourth quarter payment on to be. I just had a guy in my office today, and he has a couple properties in the UK, and he was asking me. We pulled up his prior year return. I put it right on my computer. He's a local guy, so he was in my office, and he goes, "Okay, my W-2 income is going to be the same. What would happen to my tax if I sold those two properties in the UK?" So we went in and we looked at his depreciation schedule, figured out what his gains would be, plugged them into the software. I said, all right, you know what? If we plug this in, this is the extra tax you're going to owe. And he's able to make a decision on that sale right then. Okay, can you live with that? Yes. Okay, now he knows what he wants to do. All right, so that's one example of one that was really good. I just sat down with another guy today, and this is, like I said before, this is totally tax projection, tax planning time, and he's a dentist, and he's a new dentist, brand new. This is his first year. He's got an entity set up. He's putting the money into his business bank account. He's doing what he needs to do that way. I started asking him, well, what salary did you end up doing? And he's like, what are you talking about? So I started explaining to him, just how salary works when you have an S corporation. He had no idea that he even needed to do that. So I connected him with a payroll company, and through that, we probably end up saving him $6,000 in payroll taxes. And also, we did a little projection for him and let him know exactly how much tax he was going to owe. And so he is completely set now because he knows exactly what needs to happen. And so just a short 30-minute conversation just put his mind completely at ease, and honestly helped him really avoid a situation where he would have ended up, being in some trouble with how he worked his S corporation. So, it's the small things, it's the simple things. Sometimes it's just picking up the phone. Sometimes it's just scheduling an appointment. But that is two experiences that I just had earlier this afternoon that taught me that these types of things are really important. Let's get into probably what you guys are all here for. You want to know what the tax savings opportunities are. And, I went through the penalties. I went through the interest. Even though it's not big numbers with those penalties, I still like to save that money because, sometimes those penalties can be as much as what my fee is. And I definitely feel like if I can save you what my fee is, then I'm doing my job. And so that's what I always look for. I'll give you some, tax savings opportunities. The first one is huge with Anderson. You guys know us well enough. Creating an entity is an extremely beneficial way to have tax savings opportunities. I've got a client who had been using a Schedule C for his business, and he ended up kind of blowing up this year. Ended up making a ton more money with the contract that he ended up having, and we were able to file a late S corporation 2553, which is making an S election. And right now we're working on getting him a reasonable salary, and we're going to end up saving a ton of money in self-employment tax for him. And so creating an entity is great for self-employment tax. I also put that at the top because last month I ended up talking about saving payroll taxes and self-employment taxes through creation of an entity. So I wanted to just kind of piggyback off of that a little bit, and also reinforce what we learned last month, and give a little continuity to what we're doing here. It also can be good with income splitting with entities as well. And this is a traditional Anderson approach and non-traditional approach in throughout the country with CPAs and practitioners. But as you guys know, we love setting up a corporation and setting up a partnership, and then running, a percentage of the income that is received through our business entity to the corporation. So, more can come on that. If you have questions on that, we can definitely go through those. But through creation of entities and all the things that you can do with entities, and a lot of the things that Anderson preaches at our seminars, at our trainings, our webinars, is all built around tax savings opportunities. So hopefully, some of you guys who are listening have seen the benefits of that already. If you haven't, I really want to talk to you about it. So, creation of an entity is a great way to save. I put accelerating and decelerating income and expenses. And, one of the main things here is, tax rates are going up. You may be in a low tax bracket this year. And this is where, there's a lot of different ways this can go. But let's say you're in a low tax bracket this year, and you know that you're going to get, a big contract early in next year. You may want to tell whoever you're dealing with, let's get some of that income into 2015 for me. I don't want all the income in 2016. Let's give some of that into 2015 because I'm going to be in a lower tax bracket in 2015. It may end up being the opposite, where you say, okay, you know what? I need to get some of I need to send my invoices out a little bit later this year. Okay. We might be sitting there in December where we say, you know what? Hey, why don't you send out those invoices in January instead? And you had a great year. You're going to be in a 35% tax bracket. Next year maybe doesn't look as good. Maybe you want to kind of work that income and expense to be something that works and fits for you. I know I had a few clients this year where we did do some of that sort of stuff, and we're able to save some money. You may also end up saying, okay, we had a great year this year. Let me go buy all my supplies that I know I'm going to end up buying in January or February. Let me just buy a bunch of it right now. So there's some things that you can do there with your income and expenses to either push income out, bring income into the year. There's a few different ways that you can go about that. So, that's one thing that, I felt like was important to say. The other thing that I'll say with that, and it's just a little story that I have, but I had a guy who ended up selling several rental properties right at the end of December. And he ended up being in a high tax bracket. He was kind of working on retiring and being done. And he ended up selling all of his real estate in at the very end of 2014. And I just thought to myself, there's nothing we can do about it afterwards, but I thought to myself, if you would have sold half of that real estate or 3/4 of that real estate, any of it, 2 weeks later, you may have cut your tax bill in half. And so what I really want to stress and push is that there's opportunity for us when we're talking to really just be smart about what our plans are and what we're trying to accomplish. Hopefully, you've kind of gathered that from what we're talking about here. Let's see, being organized. I've pushed this through webinars over and over again, but being organized is probably one of the most important things you can do. I love when I have somebody who has their books that are, 10, 11 months done, and they can send me a QuickBooks file or something like that before the end of the year. Because I know that they're up to date. I can look at them. I can see if all the expenses are in there. I can look for opportunities. When people are unorganized, I know for a fact that stuff gets missed. It's not scientific. I don't have any stats or anything like that to really push down to you guys. But the person who is organized ends up catching and capturing all of their expenses. The person who isn't organized and throws it all together in February or March and pushes it out to the CPA, they're the ones that miss stuff. I guarantee it. I know it. I've seen it. And so what I really want to just encourage you guys to do is be organized. One huge step to being organized could just be something as simple as, you know what? I set up a business bank account, and everything I do related to that business is in a business bank account. Okay. Then the bookkeepers or you, when you go through and kind of put everything together, you know that everything is accumulated in that business bank account. I don't know how many clients I have that say, oh, well, this was paid personally, or I used a personal credit card for those expenses. And I just know that when that happens, there's stuff that gets missed. So being organized, reviewing your books, going through them to make sure that you've hit everything is super important. One of the things that we'll always do at Anderson, and I always check this, but I'll look at your legal and professional expense, and you know, sometimes I'll see it blank, for example, and then I'll say to myself, okay, you know what? Let me go look in our software here and let me see how much they paid last year for their tax preparation fees. And a lot of times that won't be on the list of the expenses that you guys give us in your organizer. So I'll always add that expense. Another thing that I'll go add and look at, because I could see it on our records, is what you guys are paying for your state filing fees for your business licenses. And a lot of times I see that that's not on the organizers. So there's certain things that I can control and that I can look at and I can double check for you guys. But you know what? There's a lot of stuff that I can't double check for you guys. And I really just need, clients, if you guys want to get all your expenses, to be as organized as possible. And that's not me knocking on you. It's not me narking on, nothing like that. I'm just making a suggestion that if you guys are organized, it's a lot better for all of us. All right. One that used to be a huge year-end tax planning and savings opportunity was purchasing new equipment. But the government's recently limited the benefit of Section 179. For 2015, it's only $25,000. Now, for some of you guys, that will be plenty. But, in the past, I know just last year I had a company that did some trucking work, and they had a great year. They ended up purchasing a new big rig and ended up getting the 179, a huge portion of that cost, and they got to take a massive deduction for purchasing that equipment. And so, you know what? Congress has been unfavorable to the small business in that regard. And for 2015, they limited Section 179 to 25,000. But it's still something that you guys can consider. All right. There's still computer equipment, whatever you need for your business. At the end of the year, if you come looking and you say, okay, you know what? I've got some money to be able to purchase equipment. You'll get a 179 deduction for 25,000. And then after that, you'll get you'll end up just getting regular depreciation rates. They've even put a fork into bonus depreciation, which lets you take half of it before. So, from that regard, Congress has been unfavorable to the small business owner, but still consider purchasing equipment or computers or things like that. And if you have any questions about stuff that can actually fall under the 179 category, we're happy to answer those for you. Another good one's always retirement plan contributions, SEP IRA, 401k, your regular traditional IRA. Maybe you end up having a quiet year and you decide that you want to convert your traditional IRA to a Roth IRA. That could be a tax planning strategy that benefits you long term. We have a lot of defined benefit plans here in the firm. Contributing to that could be beneficial. So, I always say, planning for retirement's a great opportunity. It gives you a nice tax deduction, but you just got to find the one that works for you the best. This is one of my favorites. Is the next one on the list is in-kind charitable donations, and I put on there appreciated stock. It's a great deal. If you've got appreciated stock in your portfolio, you can contribute that stock to a qualified charity, a 501c3, and you will get a deduction for the appreciated amount. So you go buy a stock for 10 grand, it ends up being worth 50 grand right now. You give that stock to a charity, you get the $50,000 deduction, and you don't pay any capital gains on that stock. Okay. Now, don't do this. I'll say, and whoever you're working with on doing the in-kind charitable donation, I've seen churches who can manage those, but you want to make sure that you do it right. So whoever's the brokerage that's holding your stock, you want to make sure that you get the right forms from them. Don't do this though. Don't go sell your stock and then give the money to the charity. Okay, that's not the way to go about that. So I'll put that warning out there. Don't sell it first, because then you're going to recognize the gain, and then you're still going to get the $50,000 donation, but you'll have to recognize the gain in the meantime. The awesome benefit with giving the appreciated stock to the charity is the charity ends up selling it. They're a 501c3. They don't pay any tax on that. Now, you may have some stocks that hold losses. And that, I would say, is the opposite approach. Okay, sell your stock first so that you recognize the loss, and then take the cash and donate it to charity. Now you've got your loss from your capital loss, and then you got the charitable donation. So there's two ways to go about the donating appreciated or depreciated stock. But I love that. I love that way. It seems like it really just kind of sticks it to the IRS a little bit and gets you guys a good benefit there. But just remember, if you do end up doing that, you have to itemize your deductions to get the benefit. I wanted to make sure that was clear. If you're a standard deduction type of taxpayer, then the appreciated stock thing's not really going to help you a ton. But we could go through that. We can end up kind of projecting out how much a donation like that is going to end up helping you. Planning capital gain and loss sales. I've got clients who have capital loss carryovers. We talk at the end of every year, Ronnie, how much can I sell to, and I'm not going to get capital gains. Sometimes people will print off what their annual gain loss statement is for the year, show it to me and say, okay, what do I need to do? Do I need to sell some of my losers to offset the gains? There's things that we can do there. And I just want that to be in the back of your mind that there's some planning that we can do with capital gains and losses, just depending on what your situation is overall. The last thing I'll put on there is a health savings account. Obamacare's really kind of changed health insurance for a lot of us. Some people are taking a high deductible health plan now and then kind of combining that with a health savings account. Your contributions, depending on whether you're single or you have a family, to your health savings account are a deduction on your tax return. It could be a great opportunity because it's an earnings account. And so, the earnings that you get from that account, as long as you use the proceeds from it for qualified medical expenses, are tax-free earnings. It's a tax-free investment account. So there's a few things there that, I put in here that I felt like were good opportunities for us. Definitely, everyone's situation is different, and that's why, we sit down as professionals, we look at it, we want to make sure that we have an understanding of you and your business and what you're trying to accomplish, and then we just get you comfortable where you understand what you're looking at in April. You understand what you can do right now to benefit you. You understand. It's all about understanding for me. It's all about just making sure that, I've taken the time to educate you. It's what we end up doing here. It's like I've mentioned several times before, if you know what you're doing, that's a complete benefit for me in my job. And overall, we're going to make sure that we do things, mistake-free, error-free, and in a way that makes you, the client, comfortable with what we have going. If you have any questions, I'm happy for you to shoot me an email. If you want to schedule a consultation, please reach out to any of our coordinators here. And we have several people here who are well equipped to do year-end tax planning, and we'll do that with you. A lot of you guys are part of our tax packages. If you're in a tax package, one of the things that we've put and included as a benefit of a tax package is that you get a free year-end tax consultation at no charge to you. So reach out to us, get on our calendar. Let's run through these consultations. Let's do these projections. Let's make sure you avoid the penalties. Let's make sure that your estimated tax withholdings are what they need to be, and quarterly. And let's make sure that we're looking at every angle that we need to look at to save tax. So hopefully you guys have enjoyed this. I've enjoyed putting it together for you guys. I always enjoy the webinars and my time that I get to spend with you. And I also appreciate the feedback that I do get from a lot of you guys as well. When you tell me what you liked about it, and I guess I don't really hear too often what you didn't like about it. But if you do end up having any of those comments, I love hearing that feedback. So feel free to reach out to me. Thank you so much. I hope you guys all have a good night.